Imagine waking up 20 years from today and realizing the small amount you invested every month has grown into a portfolio worth millions of cedis. For many Africans, investing still feels like something only rich people do. But the truth is this: you don't need to start rich to build wealth. You need the right system. In this video, we will break down how someone in Ghana can build $1 million stock portfolio by combining local investments with global opportunities. But first, I want to spend a brief moment talking about the biggest mistake African investors make while trying to invest. Many people make one major mistake. They either keep all their money in cash, where inflation slowly destroys its value, or they jump into foreign investments without understanding their own economy. A wealthy investor understands one principle: you build where you stand before you expand where you want to go. Now let me give you an example. If you live in Ghana, your first investment advantage is understanding Ghana. You understand the companies, you understand the economy, you understand the opportunities. Before chasing international stocks, build your local foundation. Your Ghana portfolio should focus on quality businesses like dividend companies. Dividend investing means owning companies that share part of their profits with shareholders. Look for businesses with strong history, profitable operations, good management, consistent dividend payments. Another example is the banking sector. Banks are connected to economic growth. When businesses expand and consumers borrow money, strong banks benefit. But don't only look at popularity. Study profit growth, bad loans, management quality, capital strength. Another one is telecommunication and digital economy. Africa's digital transformation is creating opportunities. Think about mobile money, internet growth, digital payments, technology adoptions. Companies connected to these trends may benefit from long-term growth. Now you might be asking yourself, how should I invest locally? Here is how. Your portfolio does not need to look complicated. A beginner can think about allocations like this. An example of how your portfolio should look is that Ghana investment, 40%, which means you invest 40% on capital you have into Ghanaian stocks. And you can consider dividend stocks, local companies, fixed incomes. International investments can also be 50%. That means you invest 50% of your capital into global index funds, international companies, and then you keep 10% as your cash reserves. Emergency needs and investment, which basically means the 10% you keep it so that in case something goes wrong, you have something to back yourself up. But remember, diversification is not about owning hundreds of stocks. It is about owning different types of assets that respond differently to economic changes. Now, your local investments. Here is how you move international. Ghana is full of opportunities, but Ghana is not the entire world economy. Global investments allow you to own part of technological companies, global brands, healthcare companies, artificial intelligence companies, international businesses. Imagine owning small pieces of companies serving billions of customers worldwide. That is power of global investment. Now, I'm going to give you the $1 million formula that you can use to invest both locally and internationally. Building $1 million portfolio is not about finding one magical stock. It is about three things. Time. The earlier you start, the more compound growth works for you. It's about consistency. Investing 500 cedis every month for years can be more powerful than investing a large amount once and stopping. It's about reinvestment. Successful investment don't just collect returns. They put those returns back to work. Now I'm going to design a realistic wealth plan for you in case you are still in your early 20s. For example, at age 25, start investing monthly. Build Ghana foundation. Add international exposure. Increase contributions as income grows. Which means if you started with 500 cedis investment every month, as your income grows, you can move probably to 700 cedis or 1,000 cedis. At age 35, portfolio has momentum. Dividend begins growing. Investment become a second income stream. So after doing this investment for 10 years, as I told you, by now your dividends are growing, your returns are also growing. At 45, compound growth becomes your biggest advantage. At 45, now all your investments have started making more money, and those profits are also making more money again. The biggest difference between wealthy investors and everyone else is not intelligence. It's ownership. They own businesses, they own assets, they own pieces of the economy. Your salary can pay your bills, but your investments can build your future. The journey to $1 million portfolio does not start with millions. It starts with your first investment. If you found this video valuable, subscribe to the channel, follow us on Facebook and TikTok, and share it with a friend that needs advice on stocks. See you in the next video.